Good evening, everybody. Thank you for sharing this part of your Friday evening with me. It's good to see you here. And this is our last session of what's been a 5-day discretionary challenge. And I thought it was worthwhile just giving you some information about what you can do with the latest in terms of technology and stuff to make your life easier on exits and hopefully more profitable, of course. We all know that exits are where the money leaks or the money is gained. It's also fairly easy to fix if we've got the right things in place. Now, we all have some things in place when we trade a discretionary trade, I'm sure. And this applies to whether you're trading short-term, medium-term, long-term. So it's relevant to all discretionary traders. Some of you who have been or who have dipped your toes in the water of full automation will be familiar with some of the concepts. But either way, this is aimed at people who are doing discretionary entries. The reality is that often as discretionary traders, we have a perfectly good strategy, but we see those winning strategies lose, not because of the entries or the quality of those, or even your plan as a whole. You've, I'm sure, invested lots of time, and those of you who have done AI courses, lots of communication with either ChatGPT or Claude to develop a trading strategy that's robust, that covers all of your entry scenarios, including your confluence factors and all of your potential exits. However, because of a combination of the exits that people have in place, and they need to be as robust about exits as they are entries, and circumstances, we often see trades lose which would otherwise, if we were awake for 24 hours a day or in front of a computer for 24 hours a day, we'd be able to manage very well. And the reality of that is seen in times when you're in front of a computer versus times which you're not. And we can always do things better, and this really is about doing things better, quicker, easier, and more profitable, hopefully. The reality is that you're already delving in the world of some automation. Every stop loss and every take profit you put on your system is an instruction, an automated exit instruction. The platform is executing for you. And tonight is really all about the next level of the same idea. So my guess is that you don't fully manually exit every trade that you enter, even if you're trading on a longer, medium to longer term basis. Chances are you have a stop loss, a take profit. You might even use the somewhat poor trail stop mechanisms that are in place on some platforms, for example, MT5, MT4. And most of you, my guess is, will be in that place. So as I said, what we're trying to do here is take it to the next level. We're not looking at a full EA. We're looking at where entries and exits are automated end to end. What we're looking at is potentially exit automation, which is a choice thing. You can either switch it off or switch it on at any time, whenever it suits you. So you walk away from your computer, you can switch it on. You go to sleep, you can switch it on. So it's whenever it suits you. And that's what we're going to cover tonight, how that works, and a couple of options that we've developed and what's coming soon, which I'm not going to do a big sell on any of that at all. I'm just giving you information tonight and an opportunity to ask more questions. So your entries stay yours. And as a discretionary trader, there are advantages of a discretionary entry, but your exits, as you like, get managed when you can't be there. Now, I'm going to give you some scenarios that I'm sure you guys are familiar with, potentially. So scenario one is the overnight round trip, where we have a good entry, and then perhaps we decided to get some sleep. We were up $500 or $600, and the only instructions we left behind were a line above as a take profit and the line below as a stop loss. And so what happens overnight, not sure what's happened to the text there, but what's essentially happened is during the night after you went to bed, it's gone up, it's not quite hit your profit target, and comes down and triggers your stop. And of course, at 7 a.m., you wake up to the fact that you were $600 up here, probably more so up here, peak of 1,700, let's say, and then gave it all back to the market because you weren't in front of your computer. Scenario 2 is you're punished for having a life. So the trade was working fine, then real life happened. You needed to go and pick up the kids from school. You were going out with your partner for a nice meal out. You were doing whatever it is you choose to do. You don't want to, trading shouldn't be something that means you sit in front of a computer all the time. It's about creating a better lifestyle, not taking away from it. But what you did is because you decided that, well, look, you don't want to leave it to the mercy of the market. What you perhaps do is close it down maybe 1.5% better off than your entry, feeling quite chuffed with yourself that you had banked 1.5 risk. So the better safe than sorry. So there we go, the school pickup, the meeting, the dinner, and what happens, of course, is you're away doing your life stuff, and then the market continues to move upwards in your direction, and you could have actually gained 3 times the amount you actually exited on for having a life. That makes sense. And then the frozen finger. So price, which is you've written down target, and a voice just says just a little bit more, just a little bit more, just a little bit more. And because you're not feeling the best, or because you're getting into a little bit of FOMO, and because this is a written down target, not a systems take profit, and because you perhaps don't see this move that it didn't go through, you thought, right, it's going to break through, that's cool. Or you maybe had to take profit and it didn't quite trigger it. And what happens, of course, is you give it all back, and it closes at the stop. Or maybe you come back and you see it somewhere here, but knowing that you're sort of just above break even, what you need to think of as a trader is it's not just your profit loss isn't the only metric in terms of how well you've done. We often talk about maximum favorable excursion, which is the amount it moves in your direction before turning around. That's the purposes of entry, is to create a maximum favorable excursion. The purposes of exit are twofold. If it goes against you, i.e. maximum adverse excursion, you want to limit that as much as possible. But also, we want to retain as much of that MFE as we possibly can. So we are resigned to the fact that we're going to have to give some back, but we certainly don't want to give all this and some back. Even if at this stage we'd sort of trail the stop up to break even, the amount we're given back in all of these 3 scenarios is significant. So sort of let me know, just type in yes if any of those scenarios have happened to you, or if those sound very familiar. My guess is that most of you will actually type in yes, because they are. I can resonate with my discretionary trading things that times where this had happened many times, and what could have been much better turned out to be very ordinary. Hi Keith, yes, I'm good. Yep, Paul, Keith, Doug, yeah, often. It does happen often. So you're doing the right thing, you've got the right strategy, you invested a lot of time putting it together, doing lots of back testing, or either physically or manually, or you'd put it through some sort of test engine. So you've got a great strategy there, but it's just not giving you back what you deserve for all that effort in putting it together. So my job this evening is to give you a potential solution to this, because the entry was right potentially every single time, and in all of those scenarios that I showed, the price actually went in your desired direction. But while you slept, the profit was given back. While you lived your life, the trade ran on without you after you closed it down, and while you argued with yourself about should I or shouldn't I, the winner became a loser. So really what we're trying to do here is the version that you wrote in that plan, or it could go one of 2 ways. It could operate it could execute as you desired it to, or it could execute in a different way. And it could do that every trade and every time when you chose to. Of course, when you are in front of the computer and it looks like an exit, there's no reason why you should have anything else switched on, and you can just do the thing, unless you are in the habit of arguing with yourself and a little bit of FOMO creeping in and a bit of debate. Is it going to go higher from here, etc., etc. And the reason why you might say, let's see if it goes higher, is because you know that if you close it down now, even though you've got a strategy, because let's say there's a resistance above where you are, so you say to yourself, the internal voice says, oh, let's just see if it breaks that resistance. It's playing with it. Let's just see for a little bit longer. Whereas, and ultimately it drops off and you end up giving back a lot more. Whereas good practice might be to take the profit there and then be ready again if it breaks that resistance to enter another trade. But of course, the barrier might be to that is that you've only got another half an hour before you've got to go and do something. So that's important. So what we're looking at is no new strategy. So using the strategy you've got already, no new indicator, no handing your trading to a robot. What we're doing is we have an active, potentially an active trail, which trades as you want to, whatever that trail structure may be. And there's lots of ways you can trail. All we've done is essentially we put one or two extra instructions onto your platform to say, now's the time to get out. In the same way that you've already got two instructions on there that say, if it hits this level, we're out for a stop loss. If it hits this level, we're out for a take profit. So it's really only adding a couple of extra layers on top of what you're doing already and utilizing that whenever it suits you. So as I said, it's not something you would use all the time. It's something that you would use when you're moving away from your computer, where you're sleeping, where you're doing something else with your life. That is what an exit EA is all about. The reality is that every exit you take by hand, manually, fits one of these. So it either price orientated, we may partially close, a percentage of the way to a target, we bank some, let the rest work, and that fixes the frozen finger scenario. We have trails that follow price and closes when the trade hands back more than you allow. Usually prefer to measure this in ATR rather than points, so your system is transferable across multiple instruments and multiple timeframes. I've talked about that before, about why that's a good idea in terms of pricing differences, in terms of volatility differences. Then ATR is a good way to go if you're particularly if you're using an ATR multiple as your R level. So if you sort of say, right, okay, my risk is 1.5 ATR below a signal line, or 2 ATR below my entry, or whatever it may be for you, you're essentially, if you're doing multiples of ATR, doing multiples of ATR. And then time. So we may say, and here's another scenario which I could have put up there, which I didn't, was that you have positions open and there's some big data coming out. Now, if you live in Perth, that isn't so much of a drama because it comes out at 8:30 for half of the year and 9:30 p.m. the other half of the year. Both of those are relatively reasonable. However, if you're on the East Coast, one half of the year, it's around about 10:30 p.m. And for the other half of the year, it's around about midnight. So you've got a decision to make when you go to bed. Do I close this out as a result of time, because I want to close it out before that CPI data or that non-farm payrolls or that interest rate decision is released? Or it's dinner time. So it could be that you set it for it. Look, if this happens in the next 3 hours while I'm taking my partner out for something to eat, then that's fine. Then when you come back, you can turn it off again and go back to a standard discretionary manual exit. So we do this anyway from a discretionary basis. What we're trying to do here is translate that into something that's automated. So if we look at solutions for this, there are two. So the first one is what we term an exit-only EA. So what we do is that we attach it to a specific trade, and then it manages that trade based on the parameters that we set in. If we have other EAs that are entry-only EAs, which are possible, so I just included this for completeness, it's really out the discretionary toolbox, but you can have an entry-only EA as well, and then attach an exit to it. So we can have things like time exits, partial close, maximum give back, ATR multiples, moving average touches, handbrakes, all of the exits that we might want, we can put in that and then choose the ones we want. Let me show you what that looks like. Right, okay, so let me know that you can see an MT5 chart. So this is NASDAQ 30, and let's say we'd entered on a bounce trade here. We've got a stop loss that's here. Now, of course, we can manually watch that. We've got a profit. We could put a profit target in somewhere there. We could trail that stuff up a little bit, make it a bit closer, like such. And then let's say we had to go. So we know we want to take profit in at. Let's put a take profit in. Well, let's put a take profit in there. Okay. So it's around about a 1-to-1, which is probably good for a mean reversion stroke bounce. So there's where we're currently set up, and of course we can see that if we go to toolbox, we'll see our trade sitting there. Okay, that's how it is. Now, what we can do is we can add an exit only EA. So this is our exit only EA here, and what we do is we drag it onto this chart, and then we have a number of options. Now you can even do true or false on this as to whether you want it to manage the trade. Now, what we notice here is just one thing to note before you do this. If we look at toolbox, you'll see each trade has a ticket number. So you'd write this ticket number down, 516, 5845. And then when you opened your exit only, you would type this in. So we're doing that to false, and then we'd do a single ticket to manage and then type that in. 516 58145. Okay, and what that does is it says only operate on this trade only with that ticket number. Okay, so this is what it looks like. It's just because of the pop-up and the way GoToWebinar works. I'll see if there's a solution. So you'll see here, then there's the different exits. So we're managed by ticket number. There's that ticket I was talking about. There's our time exit setting, and we're doing it at 1600, actually half an hour before the US market opens. We've knocked our MA exit off. We've got a stop, but not a take profit. But we wouldn't want to override the stops on the system, so we'd make both those faults. And then we've got our parabolic SAR and a MACD below that. So you can choose the exits that you want, tick them true or false, and then set the parameters for them. I hope that sort of makes sense. Right, that is option 1. So that's your exit only EA. Option 2 is your exit manager dashboard, where you can see it. You can see all the open positions in one list, any symbol, and then all you have to do is click a row to edit it. And then you decide what you're going to do and then act on it. And what it'll do is it will adjust the system stops accordingly for those that it can, and it will continue to update where those system stops are whilst your computer's open. So let me just show you that. So this is an exit dashboard, okay? So what we've done is we've taken over the screen. We've put a blank canvas behind, and then we've done this. And you can see there is that NASDAQ position right there, okay? So there's a few things we can do with this. First of all, we can close it down entirely. If there was more than one position on this open, it would show it. So for example, let's say we were entering a DAX position. I won't look at this. Let's just do a teeny tiny one. Sell by market. Okay. So what it would do is we can toggle between these. So put up a DAX chart. And what this says is this position is active. Okay. So if we look at our DAX chart there, we've gone a sell on that. So we're going to put a stop at 25.1. I'm going to take profit at, let's say, 25. And we can put apply. And you can see it puts our take profit and stop on the chart itself. And it's put our system stop in, it's put our take profit in. Now, what if we wanted a partial close? Then we can tick this. You can see it changes that and it gives us a partial close. So it'll now close 50% down at 50% of its way towards a profit target. So there, so it's applied that. If we don't want it anymore, we just do that. If we have a time exit, so let's say we're wanting it for, let's say 2100. You can see our stop and our take profit has gone on the DAX there on our system. It's always good to have it open just to make sure it's done when it was. Now you can see time exit is valid and it's monitoring for that. If we wanted both going, with our partial close and our time exit going, what do you think of that? That's pretty slick, eh? You just click, click, click. Now this is the MT5 version, but as before, if you've got this open at the bottom, you can just check that it's doing what it should. If you've got algo trading ticked, it will work accordingly. And if we wanted to do a maximum give back, we could do exactly the same with maximum give back. You see how it lights up maximum give back, and now it's just going to give back 40% of wherever it goes, but our trigger value is where it kicks in. So if we put 0.5 ATR, that's where it would be. So at that stage, it's only going to give back 40% of profit, or 30%, or whatever you want. And as long as it's green, it'll fire. That's our exit manager dashboard. This is an alternative way. Again, this is like an EA that sits in the background. What this does it slightly differently is if it trails, if it gives a maximum give back, your computer's still open, then it will automatically adjust your trail system stop. The problem is, as soon as this isn't live, then where it is then is what it is. But there's ways and means around that as well, of course. There's an entry one as well, but I really like this exit one sort of better. I must admit, I think it's quite cool. So I hope you sort of see that what we're doing with that dashboard is we're seeing every open position. You're not reliant on a chart. So it's picking the positions out, and then you click on a position and it allows you to amend things on that position. And then obviously it theoretically should act on what you do. Now I've tested this and tested it again. It seems to do what it says on the can. What you're doing is you're still actively managing the session. You're just saying, I'm going to actively manage the session like this. That's what I would do because it fits my plan. Whether I was watching it or not watching it, I'm sticking to plan. Okay, so that's what it's actually doing. It's not saying, I've got this plan, but these other things are going to mean that I can't execute it as I would like to. If this is a good way of looking at things, if you're a discretionary trader, you've got two ways of working. You've got the exit only EA and your exit dashboard. You've got to be at the screen, obviously, to do the exit dashboard, but you do also with the exit EA. You just have to be there to set both of them up, really. The advantage of the exit dashboard is you can do multiple positions at once. So it'll file your NASDAQ, it'll file your DAX, it'll file your US yen. The reality is what you're doing in both cases is your rules are decided in advance. You're not being toyed around with the emotion of should I or shouldn't I exit at this stage. You're just simply adhering to plan. And so that's sort of how it works. Just some extra info before you run this live. First of all, of course, like any tool, you need to test it on a demo account. Every exit, every trigger, you would never use any of what I've shown you there unless you've tested it out. The other thing to say is these exits run on your machine. If it's off, nothing will fire. Now, if you switch it off or a power outage or your PC goes to sleep, it'll always keep your latest stop or your trailed stop in the system, but it won't continue. So for example, the maximum give back, it won't continue to rise that to measure the peaks and rise it up. But think of it this way, you're no worse off than having no EA at all, okay? And it might be that you set it going and you leave it, you take off the sleep mode, stroke hibernate while positions are running, or you take the machine out of the equation entirely and run it on a VPS. So a virtual private server, which will cost you about $30 a month, but you might get that rebated if you do X amount of trades. So it's really important to stress those 3 points. And none of them are barriers. There's solutions for them all, but you just need to work out what's right for you. It might be that you don't hold positions overnight ever, but the other two may apply, in which case you don't need to switch your computer on. If you are happy leaving your computer on all night, then that's fine. I wonder if you can write an EA to put your computer into hibernation if there's no trades. Somebody who's on Discord, make a note of that and flick me it through. So computer hibernation if no trades open. That's all I need you to say. There's another challenge for me. And then, of course, if you're not on MetaTrader, what's the solution? Well, first of all, those are MT5 versions. There is a possibility to develop MT4 without much of a drama. Certainly of the exit-only EA. I'm not sure about the dashboard because the architecture and the coding behind MT4 is very different to MT5. But I suspect a variation of it will be possible, even if the exact replica in terms of exactly how it looks isn't completely transferable. It would obviously all come with a user guide about where to install what, etc., whatever you're using, and then how to actually use it. But that's what the possibility is. So I hope that's been interesting, useful, all that sort of jazz. Most importantly, I hope it's sort of opened your eyes to the possibilities going forward. This is available. You've seen them. You've seen them work. Your entries stay yours. Your exits will stop leaking because of those scenarios that we talked about before. No new strategy, just one extra instruction or one extra group of instructions left behind before you walk away from your computer. If you like the tools and walkthrough, details aren't in the chat at all, but you can certainly email me. Mike@tradingtoolbox.com.au for this. I can certainly set up a poll just to give me an idea about where you are. So with this, you can tick as many as are right for you. Obviously, if it's the bottom, then if it's none of the above you, then don't tick any of the others. But let me know if I've not put the panel for MT4 because I want to be sure before I say it's available. Then I want to be sure that it's sort of good. And I can let you know if you're interested in the website-based online version, the idea of that is it can potentially send you a notification via email or SMS. So just tick whatever's right for you, and it doesn't matter which one it is. There aren't that many of you, and I'll let you know. I'd like to do one final. It's about 2/3 of you voted. Very cool. Okay, there's no commitment to that. I'll just drop you an email saying, hey, look, this is the story if you want to move forward. But it's as much for me for market research in terms of what you guys are wanting, if that makes sense. Look, pop in questions, any questions you've got while that poll is running. That's cool. 3/4 of you voted. Thank you very much for your participation, guys. And as I said, there's no commitment associated with this. It was really just to gauge where you guys are at, give you some more information without smashing a sales thing on the back of a webinar. That was the idea. There we go. I'm not going to share results from that. That's between me and you guys. Right. Okay. Let's just see if we can. You're so welcome, Barry. It's great to see you, mate. Exit dashboard where we get it. Okay, Keith, I'll pop your line. Doug says consolidates what I should be doing. I should have been doing. Need to ensure I have the latest versions. Absolutely. I hope that's been interesting, useful, inspiring. If you are interested in none of that, then I hope some of the principles that we've covered today help. You need to put in terms of your plan, you would have what happens if you walk away, what happens if you go to sleep, what happens. So actually plan out what's going to happen. So it's still part of your trading plan. And of course, if you do have any of these and adopt any approach, then again, should be sort of evaluating how well that's going for you. Compare what would have happened versus what would have happened if you hadn't used it versus what happened when you did. That's a really very, very robust way of evaluating how well it's going for you. Even if it reduces a loss or make sure you make a little profit rather than no profit, then it's all good. But that evaluation of it being on and off is super, super important. It builds your confidence in it. It also suggests ways that it might be improved. I'm always open to that. Anyway, thank you for being here. Enjoy your weekend, and we'll catch you very soon. Great stuff. Take care. Bye-bye for now.